My name is Deon Rebello, and this is the DCX Bullion Vault, episode number 4. And today, my colleague Willem Theron is with us. How are you, Willem?
Good and you, Dion.
Very good, thank you. So, our last episode, we looked at the projections from 2024 and what 2025 will bring. And just out of interest, I mean, Willem, if you look at what gold did last year in 2024, it was one of the, if not the top performer globally, and especially within the US.
Yeah, I mean, it outperformed stocks, bonds, cash, pretty much all other commodities. Um, 40 all-time highs. It was really, really a crazy year for gold.
Yeah, and just in KGAR terms, I mean, in percentages, we're talking over 25%. And again, that beats US Treasuries, US cash, stocks, and global stocks included. So gold had an unbelievable 2024. Where are we looking for 2025?
The outlook in general is still bullish. People predicting around about, I think, $3,000, they say. Of course, first have to get past that 2,800 psychological barrier. As we saw, it just about touched on it last year, 2,790, and then pulled back. So if it can break through that, then I think we'll see 3,000 regardless of whether it breaks through it now or not. But the sooner it breaks through, obviously, the higher it will go. But $3,000 an ounce, I think, is definitely on the cards.
And as I mentioned in our third episode of our podcast of the DCX Bullion Vault podcast, um, we did do our projections. Again, just on the performance over the last week or so, gold has been very bullish. Of course, this is in a period just in context of where we are. Uh, Trump was inaugurated. That all happened. There was a massive expectation that the US dollar would strengthen, and suddenly, America's problems would just disappear. And then, of course, like Cinderella, it's the next morning, wake up, and they're still in rags. They still got all the other big economic issues that have been underlying for more than 3, 4 decades.
Yeah, the thing is, problems like that aren't going to disappear overnight. There's a reason it's been there for 3, 4 decades, and it's going to remain there. Um, you need strong monetary policy. You need to fix the mistakes, and it's not exactly waving a magic wand, swearing in a new president who's got big ideas and, frankly, crazy ideas sometimes, and they all go away. So, you know, as I said, it's not magically going to disappear. And in fact, the unpredictability of the new American government is, I think, also going to drive gold this year.
I actually definitely believe what you're saying is to be correct, and I think the markets have responded accordingly. Again, we've seen a massive buying or uptaking buying from reserve banks around the world, and again, China has been in the forefront of that. But today we're on a very specific thing. We talk about retirement annuities or RAs or your retirement planning. Now, when I grew up and I went into the business world, I was told work hard, get yourself a retirement annuity, and by the end of your career, be it at 55, that's now being pushed out to 60, 65, and even probably further now to around 70. You can enjoy the benefits of your hard-earned work and your monthly contributions into an FSB authorized service provider that can give you a really well structured product that's going to give good returns and a nice little nest egg.
Well, you see, here's the thing. Yes, when you initially open that policy and you look at the returns they give you, the predicted returns on it, it's a good return if you had that money now.
Yeah.
Problem is, you're not going to have that money now. You're going to have that money in 40, 50 years' time. And then it's not going to be as great as it sounds right now.
And also another thing, and this is very important, is if we consider that where we are doing this stream from is in Johannesburg, South Africa. So we live within the South African rand, and that dominates on how we buy and sell various things to keep our lives running and to pay off our various debts and so on. And how the rand has performed to the dollar over the last 3 decades also has not been great. And there's been a definite almost losing value to the dollar on an ongoing basis. And we've now hit in, I think it was around 2022, the dollar had actually, the rand had lost quite a bit of ground to the dollar. Sorry, in around January of 2020, March 2020, that's straight into COVID. The rand jumped up to all-time losses or highs against the dollar and went to close to, if I remember, it was about 18 rand to the dollar. We've seen it pull back quite nicely, and last year there's a little bit of a recovery, but we've seen that deterioration of the rand to the dollar over the last 3 years. And then going into this year, straight away, come into January, it went straight back into around 18 rand to the dollar and is now currently sitting around 70, 18 rand 70 as we speak.
No, definitely. If we look over the past few years, there's definitely been a decline in the value of the rand versus the American dollar, and that has the effect that everything becomes more expensive.
Yes, and if we also look at currencies and what does that mean? So we look at gold over the last 50 years. We've seen that gold has progressively got more expensive over that period of time. If we see what $100 would have bought you 30 years ago, 20 years ago, or even 10 years ago, even 5 years ago, or even 100 rand, what that would have bought you
Yeah,
over the
it's
same
it's
period.
it's, it's literally just the erosion of buying power, and it's inflation. It's what's happening across the world in literally every country. You know, your money doesn't buy what it did last year. Things are more expensive, prices go up, and oftentimes your income does not match that increase.
Okay, so as we had said, we here to talk about specifically about gold in comparison to retirement planning. Now, off the bat, we are not financial service providers. The information we're giving is merely to almost inform. We always do emphasize, please do your homework and make sure that you're making the right decisions for you and your family. But that said, what we went and did, and we took my own personal RA retirement annuity, and we unpacked it over the period of time it's had, and we're going to go into that now, and we're going to literally break it down to the rands and cents, and the premium values versus the current value, and then we're also going to show you if we had bought gold over that same period, what would that mean?
Okay, so yeah, let's climb straight into that. So the period of time we're talking here is 16 years roughly. And over those 16 years, obviously every year or every 2 years or every so often, you've got an increase in your premiums to keep up with inflation, which already tells you that, you know, the original ideas that you had for it, you have to be putting in more now to keep up with that. And but anyway, so let's get into it. So up until date on your RA, you have invested 200,752 rands.
So just to qualify that, so that's my monthly payment. So every
That's your
single month,
monthly payment,
my
yes.
monthly premium that gets debited off my account
That's it,
over
yeah.
that 15-year or just short of 16-year period, that amounts to 207,000.
200,752.
Okay. So that's
Call
the
it
money.
201.
Okay. So but that's the money in the bank. That literally that's the money in my little piggy bank, my little nest egg.
Well, that's the money that's come out of your pocket into your
Nest egg.
retirement
Yes.
annuity,
Yeah.
yes.
Okay. What is the current value of that in rand terms?
So the current value is sitting at 288,000 rands.
Okay, so 288,000. What would that be then in
If,
percentage?
if we look at that, the percentage growth on that is 43%, which doesn't sound bad at all. However, if we break it down into a compound annual growth rate, it becomes a little less rosy. You're looking at about 2.1%.
Okay, so that's quite important here. So also another interesting thing about this whole thing when we actually went into it is we applied it into dollars. So let's just go into that also quickly.
Yeah, definitely. So once again, what we've done is we've taken the actual rand to dollar exchange rate on the day of each one of your payments. So what it would have been in 2009 on the 1st of December, what it would have been in 2010 on the 1st of January. Every time your payment went off, we took that exchange rate on that exact same day and we converted that into dollars to get an idea of what you've paid in terms of dollar amounts. And that actually comes to $15,343.
And from that, what did you actually then unpack?
So if we look at it in terms of dollars, as you know, we took literally the rand dollar exchange rate on the day of each of your payments. So 2009, December 1st, what was the rand dollar exchange rate? We converted what you paid in rands into dollars. And we did that throughout all of the years. And what we've come up with is basically what went into your RA is $15,343 US dollars.
Okay. And the end of it, because when we looked at this and originally for a large portion of the period that we'd applied this dollar rate to the RA, so we expressed it in dollars, we actually ran at a complete and utter loss. In other words, I was putting in more money than I was getting out.
Yeah, I mean, if we look at it now, it's sitting, if we have to take the value of your RA now, which is 288,365 rands. If we turn that into dollar, it's currently sitting at 15,470 rands, which is the first time that it's actually shown positive growth in terms of US dollars.
And we're talking here a very, very small percentage also.
It's 0.82%.
Okay. So that aside, and we'll go through these numbers again just to almost re-emphasize this. Now, if I'd gone on day one of when I chose to take out a retirement annuity, or when I chose to actually say I need to start investing long term, because this is also another very important thing. Buying physical gold, physical bullion, people tend to want to buy today and then sell tomorrow. But the concept here is about long-term growth. It's about buying and holding, or buying a large amount and then holding it over a longer period. Now, if we take this same model based on the exact same premiums that I would have been buying gold, paying for on my premiums on a monthly basis, and we went and bought gold, what would that be now?
Okay, so let's start with what we've done here. Firstly, what we've done is exactly the same as we did with the dollar. We take the price on the day of each payment and we convert that into what you would have bought with gold. Secondly, we use the LMBA afternoon fix, and we didn't just go according to spot price. We applied a 5% markup on that gold, which is something you'd encounter in manufacturing costs, in dealer fees, etc., etc. So we've applied that extra 5% markup on all of it, and it gives us a bit more of a realistic idea of what we'd have. So with that in mind, let's get into the good stuff. Firstly, over that same 16 years, you would have accumulated 305 grams of gold. 305.33 grams of gold. And that translates roughly to 9.78 ounces of gold. And this is where it becomes absolutely incredible, is if you take that gold at the current gold price of $2,715 and you apply that to that 9.7 ounces of gold, you would be sitting with $26,570 worth of gold, compared to the RA, which is currently valued at 15,470 US dollars.
Okay, so and if we had then expressed that in rands?
And this is where it gets even better, because you would be sitting on just shy of R500,000 on your gold. It would be 495,273 rands.
Okay, so let me just get this right here. So if we took just over 200,000 rands worth of premiums over the last 16 years, that current value, if I'd bought gold over that period of time, would be worth just short of 500,000 rand.
That's 100% correct. If we looked at it in terms of percentage, that's 146% increase on your initial investment.
It's actually incredible, and to think that again, gold is generally pitched as an alternative investment, and we that's the main drive of this podcast also is to start breaking those perceptions because again we look at an RA and by no means am I knocking an RA because that's it's what the public has access to, but what we are also showing here is there are other options.
And I think that's probably the most important thing here is, you know, we told these are your investment options, and a lot of people tend to go all in on that, and that's the biggest mistake I think you can make. They're always saying diversify your portfolio, and that I think goes for everybody. It doesn't simply go for the super rich. You know, it's easier these days to diversify your portfolio, to buy into things like gold, like silver, precious metals, and things like that. And yeah, there's a lot of other options out there. I mean, you're looking at digital currencies like your Bitcoin and etc. It's all out there. It's all available, and putting all your eggs in one basket. I mean, that saying is all this time. Don't do it.
Yeah, spot on. And this is also the other thing is if we if we're not going to be putting this information out, and this is why we started this, as I said, is we want to just make sure that people have different options to make it to be the most to be completely informed to make the best decisions. And again, this proves it. I mean, we've seen the performance of gold. We've done the outlook for 2025 and even up to 2030, and the value of gold will continue to grow. In the world we are currently in, there's a lot of things that are causing gold to become sought after, and that's got a lot to do with geopolitical things such as the different hotspots or war or civil unrest, all those kind of things add to gold increasing.
Definitely, it is gold is a safe haven investment, as we all know. You know, every time there's political tensions or geopolitical issues, people tend to gold, and that's what also drives the gold price. That's why we've seen it going as high as it did. The Israel Gaza war, Russia Ukraine, it all contributes towards that, contributes to uncertainty. Even the presidential election now in the USA, it's what a lot of people wanted. It's what a lot of people dearly didn't want, and it also just creates that uncertainty. It creates that tension, and people then flock to gold because it has proven itself in terms of a safe haven investment.
Okay, so this is the other thing. If I'm a lay person or a person listening to this podcast and I think, sure, okay, so you've said if I'd spent just over 200,000 Rand, I would now, over the last 15 years, have the value of close to 500,000 Rand. In other words, 300,000 Rand literally on top of that investment. So it is impressive. But now, how does that person take action on this? What would you suggest as being options for them?
I mean, I remember when I just started working as a young lad, and I thought to myself, wow, I'd love to invest in some gold. But, you know, what I was earning, I just couldn't afford to buy an ounce of gold. There was no way for me to save up to buy an ounce of gold. And that was your only option was, okay, you could buy a half ounce or a quarter ounce, but still, it was an insane amount of money for me back then. And I always thought to myself, I want to invest in that. But it was impossible. These days, it's a different story. I mean, you can go take a look all over the web. There's options. There are plans. I mean, what they call it, the fragmented ownership. You've got your a lot of the gold sellers are offering these plans. I mean, we've even got one of our own, the MMC, the Monthly Medallion Club, where you can buy, in our case, grams of physical gold, and then that way you can build up your stockpile until you have that ounce of gold in your hand. And I think that's the difference these days. It's not about having the cash up front, having the barrier is no longer there. The barrier to entry has been greatly reduced. It's a lot more affordable now. There's more options, and the vehicles are there. So I would urge people to just take a look at it, see what works for them, and take advantage of that. As I said, diversify that portfolio. Even if your portfolio is only a small monthly plan where you're buying gold or silver or something like that, and an RA, that's diversifying your plan.
And again, what's very important here is when you are looking to invest in these, make sure you do due diligence on the company that you're wanting to do this. As you mentioned fractionalized ownership, they do it with various sovereign coins, like in South Africa with the Kruger Rand, where you can own a percentage of the Kruger Rand and you build up the value. As we said, we looked at the model a little bit differently, and we wanted our clients to be earning physical grams or their part thereof on a monthly basis, depending on how much they could afford to be putting into their savings plan.
Yeah, definitely. And I mean, as we say, do your due diligence. Make sure that you are comfortable with the plan you choose. We decided to go a different route than many others. I personally believe that's a very good route, but it's up to everyone to look what works for them, what they believe in, which companies they trust to handle their money. Because at the end of the day, this is basically what it is. It's your money. You need to be comfortable with what you're doing with it.
Okay, so Willem, I just want to summarize all the numbers here. So let's just go through this again. So my total premiums that were deducted from my bank account on a monthly basis over the last just short of 16 years came to a value of
200,752 rands.
okay. So, and then the current and the current value is, as I mentioned, it's from one of the biggest financial service providers in the country. So they've got all the best minds to generate financial products that should be earning massive money here. What are we sitting on the actual value?
So the current value, the last update that you had was 288,365 rands. That's 43.64%, which, as I said before, nothing to sneeze at. However, in terms of CAGR, 2.15%, which isn't the greatest, let's be honest.
And I think that's also what people need to look at is, yes, it sounds impressive that it's 46% growth in the last 16 years.
88,000 rand. That's
But
a lot.
but if you break it down to CAGR, which is compound annual growth rate, to be very specific here, what that means. And the important thing there is if I had then gone, like we said, those same premiums, you mentioned how we came together with the gold pricing, that it wasn't just spot price. In fact, if we had gone with spot price, it would have been even more impressive. But we said we needed to make sure that what we're giving our viewers and our clients is as accurate information as we can give. And we do pride ourselves in having the best possible and most relevant but also most accurate information that we can disseminate into the market and into to our listeners.
Yeah, I mean, transparency and accurate information is basically what we're after. It doesn't help if you go look at something and, how many times have you seen somebody telling you how he's made millions of dollars on Bitcoin? For every one story like that, there's 100 stories of somebody who's lost his house to some investment scheme. And that's the first thing is always in moderation.
Yeah, and exactly. So when we came up with the pricing of gold, we took the spot price, we added the 5% premium. As Willem said, there's cost to make a physical product. And if you look across the board in most countries, you'll normally see that physical bullion products, be it coins or medallions, will have a premium above spot price. So that's why we definitely added that. So if I then had taken that full, just short of 16-year period, every single month, bought, be it grams or a fractionalized percentage of a bullion product, what would I be sitting on now?
So 305.33 grams. And that comes to 9.78 ounces. And if we take that 9.78 ounces, we apply the gold price, and now this time we're working with spot because they're not going to buy it from you at the price you paid or at the markup you paid. They're going to buy it at spot, sometimes even less spot. So we took this one at spot, we applied that, and we're sitting on 495,273 rands.
And in percentage, you mentioned.
Percentage, yeah, we're looking at 146%.
So 46% on the traditional RA versus 146%.
It's 103% more.
Yes. And that for us is what this is about. So I think just based on today, and again, we do really ask our viewers and listeners if there's any specific bullion related topics that you'd like us to unpack or maybe discuss further that you're not too sure of. Please don't hesitate. Drop us a message, send us an email on all the information provided at the end of this video. And please don't hesitate. Join us, click follow, like it, and support us to start bringing you more content that's more relevant to you. But that said, I mean, again, as I said, to me, the most important part of this and what we're doing is to create awareness and to give the man in the street, the person there that's working hard for their money, options on how to make sure their money is not eroded. Keeping it in banks with devaluing currencies, and we're going to go into defaults in one of our next episodes, which is quite exciting because we got a number of countries that we look at. We've done case studies on both Nigeria and also Argentina. And those two have a very interesting story to be shown with countries where they go into sovereign default. South Africa, where we stay, is tinkering on that. We also can look globally. If there is a market reset, be it a depression, recession of any prolonged period, a similar thing would apply.
Yeah, definitely. I mean, I think the important thing you touched on there is a sovereign default. And yeah, as you said, we will unpack what exactly that is and the effects of it in future episode. But yeah, it's important that you make sure your money is as safe as possible, and gold is probably one of the best vehicles to do that.
Willem, just in closing, just to, with regards to, we spoke of different companies, and we are more than happy to have changed someone's perception and they go and look at gold products elsewhere. But just to also re-emphasize, we utilize Fidelity Security Group for our vaulting. They're an independent vaulting company. Our bullion is audited and rechecked and done on a monthly basis. And also the important thing here is we've got long-standing relationships with these companies in order to make sure that what we offer you is the best possible product.
Definitely, and I mean, our gold supply is 100% from Rand Refinery. We've got credible partners for our minting, and as you mentioned, the largest security group on the continent, keeping it safe.
Willem, on closing or in closing, anything that you'd like to maybe just leave with the listener as a final thought?
I think we've pretty much said it all. The figures are there for everyone to see, and as we said, these aren't inflated in any way. If anything, we've gone as conservative on them as we could, and I think it's just a case of the buying power of your currency is the most important thing you need to keep an eye on. And how are you going to defend yourself against that? How are you going to protect your wealth against that? And once again, bullion, in my opinion, is one of the best vehicles for doing just that.
You state a very important part that we need to separate money and wealth. And this is what this is all about, is it's about wealth preservation. And it's making sure that what we are accumulating comes to some real meaningful value at the end of it. And personally, I believe gold or bullion is definitely the vehicle for that. And we're excited to continue this journey, and we will continue to make sure that what products we look at, or even within this podcast, what people we speak to, or different articles we'll discuss, we'll make sure it is as relevant for you as a listener as possible. In closing, thanks again, Willem. I do appreciate it. We will be doing this podcast is done on a weekly basis. As I mentioned, we got a couple of exciting ones coming up. We cannot wait to get into to unpack those. And again, Willem, thanks for your time.
Thank you, Deon.
God bless. Take care. Cheers.